Welcome back. It's time now to take a look at the top business stories. IMF expects increased economic growth for the Middle East. Growing concerns about US mortgagegate crisis. And the CEO of Ras Al Khaimah's Trade Free Zone talks about plans to attract additional business to the Emirates. The GCC markets ended higher this Sunday. There were similar results across the UAE bourses, as global markets gained at the close of last week's trading. The DFM gained by 0.25% to close at 1,746 points. Shares at DP World were up 3.5%, while Emirates NBD gained 1%. Air Arabia was down 0.5%. 80 million shares were traded, valued at 117 million dirhams. The ADX gained up 0.5% to close at 2,821 points. The property sector led gains. Aldar Properties was up nearly 3%. Suru Real Estate gained 2%. Etisalat was up 0.5%. 157 million shares were traded, valued at 237 million dirhams. The demand for services and logistics will contribute significantly to propel the UAE's economic recovery. The International Monetary Fund's latest Regional Economic Outlook report sees the Middle East and North Africa region experiencing a general robust recovery, aided by rising oil price, production levels and supportive fiscal policies. The UAE is expected to bounce back from last year's crash and is likely to see healthy 2.4% levels in growth this year, as opposed to a decrease of 3% in 2009. IMF officials are also bullish on Dubai in particular and believe that the emirate is likely to grow by 0.5% to 1% in 2010.
After a contraction last year in Dubai and also in the oil part of the economy, this year you begin to see a turnaround. So the demand for oil is picking up, the price of oil is picking up. This is helping the UAE economy and obviously affects its budget as well. But you also see an increased demand for services and for logistics, and that's something that is helping the Dubai economy. The real estate and construction part of the Dubai economy has stopped falling at the same pace as last year and now beginning to stabilize, but it'll take a little bit of time to work its way through the stock of real estate that is still there.
There are growing concerns in the US about a brewing crisis in the American banking sector relating to procedural lapses in foreclosing on home loan defaulters. Experts claim up to 10 million homes may go into foreclosure in the US as a result of the signing of hundreds of thousands of foreclosure documents without proper reading, where paperwork within mortgages is still missing. Some say this could be the biggest fraud case of the US capital markets in history and is now breeding a lack of confidence within the country's economy. So, is it a short-term solution that will fix the market?
Because it's a legal challenge and because there's allegations of fraud in submitting documentation to foreclose, which is a legal procedure in a court of law, I don't think there's any real shortcuts to solve the problem. The real solution is let the market work. Let prices fall to a level where supply meets demand so the market can clear, and then we can go on. I believe it could take over a decade to clean up this mess. Why? Because we had a bubble boom created by an era of cheap liberal credit. Many housing prices from their peak are off 30, 40, 50%, and some regions 70%.
The GCC markets had a positive run today. Let's check in on those numbers now, starting off with the UAE general indexes. Coming up now, let's take a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. On the way after the break, we talked to Osama El Omari, the CEO of Russell Kamer Free Trade Zone, about plans to attract SMEs to the Emirate.